Okay, so we have 3 presentations this evening. We're going to start with our external auditors report.
Yes. So I invited Jeff Shaver from O'Connor Davies here this evening. There's been a lot of conversation online regarding some of the financial statements, and I know this has already been presented at a public board meeting, but it felt appropriate to invite Jeff back and really to provide the opportunity to speak more to what some of these financial statements are, what they mean, answer any outstanding questions that may be out there, and let them be answered by the expert, who is Jeff and his team. So I don't know if anybody here has any specific questions. If not, I know that there's been some that have been shared with us, so I'd be happy to sort of reference what those are and then turn it over to Jeff to provide a much more detailed explanation than I can when it relates to financial statements. Although I'm getting better. Matt will tell you, me and him have been spending a lot of time looking through financial statements. So assuming there's no questions in the audience. All right, Jeff, so I know on page 37, there was a conversation that took place regarding refunding bonds versus the next line item that speaks to various purposes, the bonds that are $10 million. Could you just speak a little bit about what refunding bonds means versus what the $10 million various purpose bonds are on that page?
Sure. Thank you. Happy to be here. The refunding bonds, I would like to compare it to on a personal finance level. Like if you had a mortgage and you had the opportunity to get a lower rate on that mortgage, and you go back to your bank and say, hey, let's refinance that loan to achieve a better interest rate, a more favorable interest rate, that's known as a refunding transaction. So you're calling the bonds that are outstanding currently, reissuing them in order to achieve a savings, a net present value savings over time over that bond. So, and all those refunding transactions have to be approved by New York State, and they won't approve them if there's not some demonstrated savings. So it's debt that was already there. It's just been refunded to give the district a better interest rate.
Great. And that compared to the $10 million in various other bonds, those are just existing bonds that remain to be paid off yet.
So yeah, that wasn't refunded. That was just issued several years ago in 2023. Most bonds are not callable immediately, so you may have to wait years before that bond could be callable and you could do a refunding transaction. Or if the interest rates aren't favorable, it may be best just to leave that outstanding. And that depends on the market and where the interest rates are falling.
Right. And just correct me if I'm wrong, that $10 million, the year that was taken out is 2023. That's the remainder of the 2018 approved project that was completed in 2021. The way for the community, the way we pay for those projects along the way are through something called bands. So those are bond anticipation notes. So it's sort of short-term lending. So as we need to pay off a vendor, we take a short-term loan, we pay them off. We take a short-term loan, we pay them off. And the way what that allows us to do is to only spend the money we need to. So if we have a $14 million bond and we're able to complete the work for $13 million, we only ever borrow the $13 million. We don't have an extra million just hanging around that we didn't use. So those short-term loans allow us to only borrow what we need. And then once the project's complete, then you take all those short-term loans and you lump them into one bond. Obviously, you pay interest along the way, which is why that number is now $10 million. That was part of that initial bond versus what was a $14 million project to begin with.
That was well said.
How'd I do?
That was well said. Don't have anything to add to that.
Matthew's been working hard on me. All right. So on the next page, page 38, is a summary of our outstanding bonds as well as our EPC payments. I know one of the questions that came up in the community was the ratio of our principal balance versus the interest rate that's owed on those numbers. Can you just speak to how that compares to other districts? Is that something that looks in line with the industry? Is that something that we should take another look at? Is that something that seems favorable to us or not? What are your thoughts regarding the balance, the principal balance versus the anticipated interest paid over the next 12 years or so.
So the first thing I'll say is, these numbers on the page don't tell the entire picture. And the entire picture is when you issued that bond, which we mentioned back on page 37, $10,525,000, there was something associated with that called a bond premium. The bond premium is an additional source to the school district, and that is meant to lower your interest costs over time. So on page 38, where you see a total of $4,244,000 of interest payments to be made, the bond premium that's given to the district up front lowers that effective cost over time. Now, this will be your cash outlays. That premium is received up front. In the bond financing world, they talk about net interest cost, which is kind of like the true interest cost that the district has to pay, factoring in the coupon, which is what you see here, less the premiums that get reduced that effectively over time. The net interest cost in this case was about 3.2%. So that compares to a coupon of 5. So first thing is, the numbers here on the page don't tell the complete story. The actual net interest cost is actually a little bit lower. It's almost a better question for a fiscal advisor to come in and say, was this a favorable interest rate, was it not? All I could say is it's pretty typical to what I see at other school districts. And it depends on your bond rating and how the market's looking at your specific situation and what interest rates you might get. And also timing of the market. If you went and did that bond today, I don't think you'd be getting that 3.2. You'd probably be looking at a little bit higher of a rate just because of the market.
They've gone up.
But it is in line, I would say, with other nearby school districts that have issued debt around that time period.
Please, if anyone has questions, feel free to jump in. All right, so the next question goes to page 48 of the financial statement. It states that the district currently has $7,060,753 in our capital reserve fund. I know that the previous project that the district proposed to the public was anticipating using $2.5 million of that. So I think it's about 36% of that entire amount. And there was certainly some debate and concerns last evening regarding whether or not we should deplete that $7 million and then only borrow what's left, or is it more fiscally prudent to keep some of that money back for future projects, and what the implications of state aid are, whether we pay out of pocket versus getting the aid back on it. So can you just speak to, I guess maybe twofold, one, what are your thoughts of that number being a district our size and knowing our history, having audited us for several years, and two, what would your recommendation be regarding whether or not we should deplete that reserve versus use a portion of it to offset the cost of the project? I know some of these are financial advisor questions too.
They could be financial advisor questions. The first thing I'll say is, from an auditor's point of view, the most important thing that we look at when it comes to these capital reserves, it's essentially a savings account for future capital projects. The voters are required to approve setting up of these reserves. So it went to a public vote. The voters allowed the district to accumulate monies for capital projects. The total amount of that, I believe, was $10 million. You did spend some along the way, bringing this total to $7 million. So from an auditor's point of view, did you go out to the public vote? You clearly did. And are you within the confines of what the voters allowed for? And yes, you are. So the capital reserve is, from my point of view, allowable under the guidelines. So I think that's first. It's certainly prudent to accumulate capital reserves whenever feasible. And the question of, how much of it do you use versus how much of it do you save? It's really, I'll go back to personal finance. Like, if you're going to do a renovation on your house, do you want to raise your savings account and deplete it to zero to reduce the amount of debt you have outstanding, or would you rather kind of balance that out? So, in my view, it's always nice to keep a little bit in the pocket there, for future unanticipated costs. So as a conservative accountant that I am, it'd always be my personal opinion to keep a little bit behind. That's just my personal opinion. Ultimately, decisions like that are board level decisions, and that of course needs to be approved by the voters. So it becomes a board level decision and a community decision on how those are handled. But certainly, what I tell all districts this, it's a prudent reserve to have, but it's also very restrictive in that the voters approved it before just to set it up. They also have to approve it again before you take it down. So you have like a dual mandate there where voters have to approve going in and voters have to approve it going out. So you are restricted in that way.
But, you talk about keeping a little bit back, but in a school district, a little bit doesn't necessarily cover if there was a major problem or major issue in the district, right? If you keep 10% back or 20% back and spend the rest, it seems to me that doesn't leave enough for an emergency. But again, it's a person, yeah.
It's philosophical almost, and I could sit here and talk about it for hours, and we could discuss it for hours, and people ultimately will have different opinions on how much of that to use. I will say that, in terms of capital improvements and the cost of capital improvements, $7 million is not a huge sum of money, because a school district can spend that very, 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 very quickly. It doesn't take much to spend that. Just the cost I've seen, turf fields, you mentioned the turf fields. Okay. Roofs are very expensive. So any kind of building alterations, are very expensive. So $7 million, may feel like it's a big sum of money, but I don't really, it doesn't seem like a big sum of money from the chair I sit in.
Okay. Thank you.
As much as we wish $7 million went that much further, the reality is when you see the bids come in, it doesn't go very far, unfortunately. All right, so I think my last question that I had gotten from the community is on page 65 and 66. I don't know if there was a specific question per se, as much as maybe just confusion regarding how this chart reads out. Part of the complicating factor is it reads across 2 pages. I think some community members were focusing maybe on one side of the page without looking at the other. Can you just provide us sort of a quick overview as to what it is that this page tracks and how it's intended to be read?
Absolutely. So it is a 2-page presentation, so looking at one or the other is kind of just going to confuse the situation. This is a schedule from inception to date of all capital projects that the district is undertaking or trying to complete as of the fiscal year end. In this case, we're talking about June 30th, 2024. So we start with, the first column is the project budget, which generally would be supported by some kind of voter authorization. If you go back to the bond that we were just discussing, the voter authorization in that case was $14.81 million, and you've spent, at this point, you've spent everything that you're going to spend, $14,694,000, which says to me, as the auditor, the district did not overexpend the project, which is very important.
Dave will keep telling me that he came in under budget.
Yes, he came in under budget in that case. So that's one of the things as auditors we look for, and if I was a member of the public, you want to look for, that would be an issue if you see a district overexpending capital projects. You generally can't go over the authorization. So that's an important thing that you would see on this schedule. It shows you everything that's been spent in prior years. That's a cumulative number from the day the project started. It shows you what was spent in the current year, and it gives you the total of all the spending on each project. And then it gives you what we call the unexpended balance, or amount left to spend. If the number's positive, you have an underspending. So that means you've come in under budget. And then to the right of that, the right side of that page, is where we detail the different financing sources of those specific projects. Could be a number of different things in here. Bonds are the biggest numbers typically. And you'll see in that project, all the bonds would be considered, proceeds of obligations. So that's bonds and other debt falls into that category, revenue source for that specific project. Interfund transfers are almost, in the case of a school district in New York State, almost always transfers from your general fund budget. So those are also voter-approved transfers to specific projects. Almost every district I go to authorizes, or the budgets authorize some current funding from an operating budget for generally smaller capital projects. And that's what you've done here with, for instance, the high school roof replacement is one of them, and a modular remodel, which is smaller dollars, and so on and so forth. So those interfund transfers represent amounts used, earmarked from your operating budget, transferred over to fund those specific projects. Again, voter approved through the operating budget. And then we have total revenues and fund balance or deficit. So fund balance and deficit would be how much money, how much fund balance is left on each specific project, which is related to the amount that's unexpended generally. Assuming you've received all your revenue sources, it would be the same number. Bond anticipation notes outstanding is there to show that projects that are in an accounting deficit that might show a negative amount in the fund balance is really not, in a true sense, in a deficit because you have a short-term debt outstanding to fund that. So it offsets the negative. In reality, in my mind as an auditor, the two added together should be a positive number. So, for instance, you have some small amount of bond anticipation notes for school buses. The amount of that debt outstanding is greater than the project deficit, so you're not in a negative situation in reality. That is kind of how the schedule works. It tells, there's a lot you can see about project authorizations on this page. It's all here. Older projects, when they're complete and fully funded and have no money left, they'll be taken off. So, really, really old projects wouldn't be on here, but anything that still has funding or still has money left to spend will stay on the schedule until it's 100% complete. So it's a very nice snapshot of all the capital projects, all the funding sources, and the current status as of June 30th.
So one last question regarding this page. From an auditing perspective, is there anything that raises any concern to you or any of your partners?
No. Again, the concerns would be balances without adequate project budgets. Like if you were started spending on a project without any authorization in a significant way, that would be a concern. We don't see that here.
I probably wouldn't be employed very long if that happened.
It would be you really just can't do that. We also look for funding sources, and maybe a project is authorized, but the funding sources isn't there yet. What is that funding source, and why isn't it here yet? Why don't you have that money yet? And I've been trained over the years to look for those things that might be lurking in a capital projects fund where, well, okay, you're authorized, but where's the revenue? It often happens with grants, but sometimes they take years to come in. Why is that grant not here yet? But I'm not seeing, any of those types of issues here where you have, funding sources that haven't arrived. Because you really only have two things in your case. You have the transfers from the general fund, and as soon as the budget's adopted and the fiscal year starts, the district can make that transfer. So the money moves from the general fund to the capital projects. It's there, it's available. And either you have a bond anticipation note used as a funding source, so that is your funding source, or a bond in the case we were talking about, and that represents your funding source. So you don't have any of those issues. Those would be the issues I'm most concerned about when I review this these 2 pages.
Thank you. So I think one thing I just want to point out on this page, I know this question comes up a lot. The district received voter permission to borrow up to $1 million to fund school buses on a 2024 proposition. To date, the district has spent $145,548, according to this chart, of that money. What that doesn't mean is we don't have $800,000 sitting around in an account. If we go all the way to the right-hand side of the page, we show a deficit of $145,548, but a ban was taken out for $149,100 to pay that off. So when that is paid off, our surplus will be less than $3,000.
Correct.
And the remaining $850,000 is available for us to borrow, but is not but hasn't in any way been accessed.
Exactly, and you can see that on this page. So you see
Right.
the project budget in the first column is $1 million for the buses. The voters approved in one proposition the funding for the $1 million. The district is now authorized to go out and get funding for that. I believe the plan is to do those purchases over time as you need the buses. There's generally a replacement plan for the buses. This is just the first year of that replacement plan, so you spent $145,000 and you issued a bond anticipation note slightly more than that because it was most likely estimated at the time you did the debt, so you come out with a $3,000 difference or something small like that. You still have the $854,000 authorized yet to spend. You don't have the cash in hand. You have to go back out to the market to borrow it before you spend it.
I think that's the confusion sometimes. We're authorized to spend it, but we haven't already borrowed it.
Yes.
And so it's not like we're paying interest on that money. It's not like
No,
it's
not
sitting
at all.
around
It's not.
waiting to be spent.
The debt has not been issued, and you can see that on this page. It's kind of like a nuanced thing that I think maybe a taxpayer looking at this for the first time wouldn't kind of grab that right away. But you see the project authorization, $1 million. You don't necessarily have $1 million in the bank. If you see a revenue source of $1 million that you issued the bond, then you do. But in this case, you can tell right from the page here, based on what we're discussing, that's not what happened in this case.
Thank you. So, any of the board members have any questions?
I just want to note that if you go to pvcsd.org, to the district info, to the current financial info link, if you scroll down there, under external audit reports 23-24, that's where you find that document that Dr. Luft is referencing. So it is on our website. Again, it's under the district info, current financial info. Scroll down, you'll see that information.
For a school district, what's the normal amount that would be allowed in the fund balance? Not the capital projects reserve, but the fund balance itself. What would you say would be a normal amount that's allowed in that?
So the discussion of fund balance is one that we always get to when we come for the public presentation when this is complete, October, usually when the time frame is. The legal limit on fund balance is 4% of the next year's budget.
It is 4%, okay.
However, that limit applies to what we generally refer to as unassigned fund balance. Okay? So if you're looking at page 48 of the financial statements, it schedules all the various components of fund balance. That 4% limit applies to this unassigned fund balance only. The restricted funds are restricted in accordance with general municipal law or some other state law allowing you to set aside additional funds for those specified purposes. The capital projects reserve that we talked about is one of those reserves.
Right.
As the voters authorized the district to increase its savings, if you will, or increase its fund balance to fund future capital projects. So the $7 million capital reserve is in addition to the 4% that you're allowed to keep.
Yeah.
And you have other reserves here, tax certiorari reserve, that's a cost that every district unfortunately faces, employee benefit accrued liability reserve. So all those other reserves, separate and distinct from the 4%, but they have to be used in accordance with the law.
Got you, okay. So the unassigned is a 4% limit. the unassigned.
The unassigned is is where
Okay.
you get to 4%.
Yeah, thank you.
Thank you very much, Jeff.
Thank
Appreciate
you.
your time.
Yeah,
Thank you.
Can I just add, I'm a partner with PKF O'Connor Davies accounting firm. I'm not an employee of the district, so I'm kind of, I'm required to be independent of the district as your auditor. I'm the engagement partner, so I'm the person, who's basically authorizing the issuance of these audit reports. And in the audit reports, we say, there's no material misstatements found in the financial statement, or essentially, that's what we call the clean audit opinion. And of course, that's the opinion we've rendered in this case. I just wanted to state that for the public, that we do maintain independence. I don't have any relationships with those on the board or those of management. That would be a violation of my professional independence. So, just so everyone is aware.
thank you.
Thank you.
Thank you very much. Thank you for making the
Yeah.
trip out tonight.
Yeah.
Thank
Very
you.
well
Very
done.
much.
Thank you.
Again, I would recommend people go to the website, watch this video, put it all together, so you can have a clear understanding.